Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Online marketplace OLX Group and the classifieds business arm of Process has cut around 800 jobs globally. According to TechCrunch, the move comes as the company begins to phase out activities of its automotive business arm, OLX Autos, in several areas after a lengthy search for potential buyers and investors.
Climate-focused venture capital firm Avaana Capital has raised $70 million in the first close of its early-stage sustainability fund. The firm is targeting a total corpus of $100 to $125 million for the fund.
Elon Musk calls on Prime Minister Modi, says he is confident Tesla will be in India and will do so as soon as humanly possible. Also responds to former Twitter CEO Jack Dorsey's claims of being threatened by the Indian government during the farm laws protest, says Twitter does not have a choice but to obey local governments.
US-based Micron Technology becomes the first company to get cabinet approval under the semiconductor scheme. Plans to set up a chip testing and packaging facility in Gujarat. The total cost of the project will be 22,000 crore rupees, with the government supporting 50% of the investment.
Fast fashion giant Shein won approvals to re-enter India only after agreeing to a stringent licensing deal with Reliance Industries, Bloomberg reported. The agreement will require the retail arm of Reliance to fully own the domestic business, while Shein will offer production support and training to over 25,000 small and mid-sized local suppliers to produce products globally.
Microsoft CEO Satya Nadella and Activision Blizzard CEO Bobby Kotick are among the witnesses planned for a 5-day evidentiary hearing set to begin this week on the Federal Trade Commission's legal bid to block the deal. Nadella to testify about Microsoft gaming strategy, business and the planned Activision acquisition. Kotick will testify about Activision's gaming business, future plans and strategies. Those were the headlines that we're tracking for you this evening. Now, IdeaForge's IPO will open for subscription on June 26th and will close on the 29th of June. The IPO will include a fresh issuance of shares worth 240 crore rupees. The startup, which designs and manufactures drones, is expected to raise around 567 crore rupees. Ankit Mehta, the CEO of the startup, told Yash Jain that out of the capital raised, 240 crore rupees is primary issue. CFO Vipul Joshi says that 40 crores will be used for product development and 50 crores towards debt repayment. Here's a slice of that conversation.
So I think the total size of the IPO would be close to about 570 crores, of which 240 crores is primary portion of the IPO, where we'll be raising money for the company. We've already done a 60 crores pre-IPO round, which was recently announced as well.
Okay. As far as the pre-IPO round is concerned, who are the buyers? If you could help us through that.
Yeah, so we have 361 is one of the buyers, Tata AIG, and we have Think Investments, and we also have Motilal Oswal MF.
When it comes to fresh issue, and both of you can come in on this one, what is the sort of usage that you see for the money that would be coming into the company?
So right now the distribution of the proceeds is 40 crores in product development, 50 crores of repayment of debt, and 135 crores in working capital.
Okay, so about 50 crores of repayment of debt. What is the debt at this point of time on the books of the company? And I think in the last 1 year, it's sort of taken a jump. If you could help us understand what was the reason for that, and with the repayment, where does the debt come down to again?
So right now our utilization has been around 85 crores. We are looking to repay about 50 crores from this. And we're hoping that the debt would stay hovering around 25 to 30 crores going ahead.
Okay, and where does that keep you on the debt to equity side?
So right now it's also 0.27, and with the repayment, obviously we'll come down significantly.
Okay, as far as the IPO and the financials of the company are concerned, I mean, if you look at the parameters on the revenue, EBITDA, on the margin side, it's been a little inconsistent. If you look at the revenue itself, 21 it was 60 crore. It jumped to 160 crore and now it's at about 186 crore. What was so special about 22 as a year for the company, where the financials did sort of see that big jump? And on the revenue side, EBITDA and EBITDA margin, where do you see the numbers hovering around on a consistent basis for the company?
From a revenue boost perspective, the company was participating in large programs of government. Government's fast track program, because of the change in the geopolitical situation, came into foray, and we were the first few winners of those programs, and we also supplied these contracts in FY22 as well as FY23. Our margins have hovered between the range of 70% to about 65% gross margin historically. We are hoping that if our growth journey and our expansion in product development to shift the overall capabilities of our product and the expansion in the market continues, then our gross margins and EBITDA margins would stay in the healthier range that they are today.
As far as the revenue itself is concerned, out of the revenue share itself, what's the share of defense and what's the share as far as the civil application is concerned?
So FY22 numbers, we've been about 80 to 20 split. In FY23, the split is still about 78.
80 in favor of defense and
20
okay.
civil. And right now it's shifting about 75 to 78% defense and remaining being civil.
Do you see a meaningful change coming in the share in let's say the next 3 to 5 years?
There will be a certain shift. We are doing considerable efforts behind increasing the overall size of the civil market itself, while defense will still continue to hold the large part of it.
Now let me speak to you about the order book that you have right now. What's the size of current order book? And out of that size, how much is civil right now in terms of the order book, and what is defense? And what kind of growth do you expect as far as the order book itself is concerned, looking at the growth that you've seen in the last 3-5 years?
So FY23 ending numbers are 192 crores of order book. Okay. While we do not bifurcate the order book in civil and defense at this juncture, we, as Ankit was pointing out, that the market itself is changing, and the overall scope, we continue to participate in large programs, and there is large possibilities of us closing on orders on these programs going ahead as well.
So what kind of growth and what is the visibility for the current order book?
So as per one latest report, there are large programs that are already in the fast track procurement that are happening from the government side. Government has outlaid requirements of roughly about 88 crores worth of procurement, $18 million worth of procurement, and those programs are taking shape as we progress this year. Some of them are for the next years, and we are continue to participate in those programs. Plus there are large-scale mapping programs that are there in the market today, which also through our service providers or resellers, our products are getting deployed as well.
One thing that I want to understand, post-IPO, what will be the eventual shareholding as far as the promoters are concerned and other shareholders are concerned?
Promoters and promoter group right now hold about 35% in the company, and based on the dilution on primary, it was going to remain above 30%.
Okay. So there is no sort of selling which is expected, to comply with the minimum public shareholding even after listing for the first 3 years.
It's not expected.
Okay. Thank you so much for speaking to us. Pleasure talking to you, and we'll see you as the issue opens. Thank you so much.
Thank you so much, Yash.
Thank you.
All right. Continuing with our focus on the skies, space situational awareness company Digantara has raised $10 million in a Series A1 funding round to further develop its revolutionary space mission assurance platform, also known as Space Map. The round was led by Peak 15 partners with participation from Avaana Capital. Digantara also recently launched 2 missions that served as a space weather testbed. To talk to us about the future roadmap and how Digantara plans to make space sustainable, joining me now is its co-founder and CEO Anirudh Sharma. Anirudh, welcome to Startup Street. First, if you could explain in a layman's language what you do with space becoming more congested and contested. Anirudh, tell us how Digantara is enabling safer space operations, what is unique about your infrastructure and your multimodal data pool.
Thank you so much for having me here, Shruti. At Digantara, we work on space situational awareness. What it means is tracking and knowing of what is happening in space. To a certain extent, we can also characterize an object. So basically, it's more or less like, in a layman's language, it's more or less like Google Maps, which helps you navigate on Earth. But we're doing something similar for space, where every space activity can be monitored, and we can help satellite operators or anyone who is performing any space activity to navigate in the orbit safely without having collision. Having looked at the past and how the space industry has changed, we have more than 6,000 active satellites and 1 million space debris. at such a pace when the industry is moving, it requires an infrastructure to grow on. And that is something that we're bringing to the table with our space mission assurance platform.
All right. Anirudh, with the fresh funds raised, you plan to invest heavily in your space tech infrastructure to track previously unobservable objects like you just mentioned. So how do you plan to do this? And most importantly, how does this empower your stakeholders in efficient decision making?
So there are two different ways to characterize and track an object in space. One is the ground-based systems like radars and telescopes that you can put on ground and track objects in space. And these can only do up to a certain extent, which is up to around 20 centimeter in size. You can track an object from ground. Below that, it becomes difficult for any ground-based systems to track an object in the orbit. Hence, we complement the ground-based infrastructure with our space-based infrastructure that will help us to track objects below 20 centimeter in size up to single centimeter. That will add more to the catalog that we're building, and that will give you more data points about what happens in space. So what it will happen to, what it'll bring to the stakeholders is basically, it becomes easy for them to make decisions because this will not have any false positives. You have more data points of what's happening in the orbit so that you can do maneuvers without having to spend and optimize a lot of fuel.
All right. While I understand that the fresh infusion of capital will allow you to deploy the first phase of Digantara's space-based surveillance satellite constellation, but I also believe there are also plans to accelerate the development of your downstream SSA service by Q2 of 2024. What's the play here? Give us the details.
So there are 3 steps to what we are building. The first step is the infrastructure layer, where we are building our own satellites that can track objects in space. And the second step of our solution is mostly a data fusion and data processing engine. We crowdsource data like Google does. They collect data from everywhere, from your phones, from their own infrastructure that they have to understand what's happening around the surroundings. So we do something similar where we crowdsource data not only from the sensors that we launch to space, but also from other sources like the government departments that are tracking objects in space. There are commercial companies providing data sets. And the last part of our solution is the analytics. And this is where we work on the downstream part of our space situational awareness platform with the space mission platform, where we want to, regardless of our infrastructure fully deployed in the orbit, we want to go out in the market because we have innovation across the value chain of what we're developing in terms of astrodynamics. Hence, we want to go out in the market in Q2 of next year, where we provide these services to different stakeholders, starting with defense, and provide this as a service to users from commercial to insurance industry.
Okay. Like you mentioned earlier in the interview, you want to build a platform as powerful and sophisticated as Google Maps, serving as a foundational layer for space operations and astrodynamics research. Anirudh, talk to me about the business and revenues. What kind of money are you making?
So Space Mission Assurance Platform is something similar to any SaaS model, where we provide our services on a subscription basis. This is for a commercial user. Now we have different segments in the space industry itself that we cater our services to. Hence, the model at which we price a customer is very different. For example, for a commercial user, we do a subscription pricing where they have to subscribe to our platform per satellite that they launch every single month, so that we provide them service of basic space situational awareness and help the satellite operation itself, because we provide this as a service to the end user with our space mission assurance platform. And the last thing that we do with our platform is basically provide this as a service to defense stakeholders, that is mostly on contract basis to different user in the defense industry and government industry, where it can be regulators wanting this as a service or defense stakeholders wanting this as a service, where they want to build sovereign capability to a particular nation, be it India or Singapore, that we're already working with.
All right. One final question, Anirudh, before I let you go, and if you could quickly answer that. Digantara has also begun the development of India's first commercial SSA optical observatory in Uttarakhand. Tell me, what will this observatory do? By when will the facility be ready, and for whom? If you could take us through the details again.
Like I mentioned, what we do is mainly launching satellites with sensors on it that can track objects in the orbit. Apart from that, to complement what we're already building in the orbit, there are no sensors in this part of the world. Hence, we want to complement our space-based infrastructure with a ground-based infrastructure at this part of the world, where we don't have any sensors. So we are developing a optical observatory in Uttarakhand, where we set up a telescope that can track objects in both lower Earth orbit and geostationary orbit. That can help us track active satellites. This is mostly from the defense standpoint. We are building this observatory in India that can help us to provide more data points to the Indian government on what's happening in the
Okay.
orbit, mainly specific to defense stakeholders like Defense Space Agency and Indian Air Force, where they can understand what is the movement of satellites of different countries over this particular location.
Okay. Anirudh,
And we are planning to make it operational probably by the end of this year. There's
okay.
been a bit of a challenge on procuring the
All
land.
right. So hopefully by end of this year, Anirudh, we've completely run out of time, but wish you the very best in all your plans, and many thanks for joining us on Startup Street today.
Thank you so much for having me here.
With that, it's time for us to take a short break. But up next, Avaana Capital has raised $70 million for the first close of its climate fund. We speak to its founder on the other side on their fundraising plans and much more. Stay tuned.
Welcome back. You're still with us on Startup Street. With a rising emphasis on sustainability and climate action, several investors are now looking to fund startups that are leading a change. Avaana Capital is on the same route. The climate-focused VC firm has recently announced the first close of $70 million for its climate and sustainability fund, and it is aiming to mobilize capital and support innovative climate solutions aligned with India's net zero targets. Now, the VC's founding partner, Anjali Bansal, joins us now to discuss about the fund and their plans to invest in Indian startups. Anjali, thank you so much for joining us on Startup Street. Now, climate change has been the big buzzword, but even as startups push toward innovation, climate tech has not seen the same kind of investment maturity or depth as other prominent areas. So what have the conversations with your investors been like with regard to climate tech space in India? What's the potential?
Thank you very much for having me on Startup Street at CNBC. I think it's a very exciting time and a very opportune time indeed to be investing behind climate solutions. Frankly, it's something we should have all started as a planet about 20 years ago, but better late than never. We are seeing a lot of global interest outside India as well as within India. Outside India and many other markets in North America and Europe, we have climate tech and climate-focused funds, thematically focused funds. In India, we are still at the beginning of the journey, but we do have fairly specific targets as a country. Honorable Prime Minister has laid out the Panchamrita goals. Right. Climate is a large part of the national agenda. And we see a large number of our big corporates, as well as so across industry, across innovation, and across policy, a commitment to solving for climate change. And as we all know, India is the most populous nation in the world. Third largest emitter, fastest.
Right, Anjali, I'm so sorry. I'm going to have to stop you there. Your phone is ringing, so we're not able to hear you very clearly. It would be great if you could silence your phone.
My phone is not ringing.
It's buzzing in the background.
Unclear?
Yeah, that would be better. Yes. Thank you.
Okay.
Yeah.
So India is integral to any global climate solution, and hence whatever we do in India really has an impact not just on our country, but also around the world.
All right. And your first close is at $70 million. How much do you hope to raise, and when will we see the final close? Talk to us about what's exciting to you about this space in India, but what are also the key challenges?
So we are looking to raise about 100 to 125 million, as
right.
Mentioned earlier. We will invest in about 20 to 25 companies, all at the early stage. We are an early stage investor. We go in with innovation, with great founders to grow their businesses, to create the impact.
Right. Anjali, I'm really sorry, but the phone is actually getting in the way of your audio. You're going to have to silence it at this point.
My phone?
Yeah, the vibration. Yeah, it's
coming.
All right. We seem to be facing a little bit of disturbance there. We can try again. As you were saying, what were the key challenges, Anjali?
The key challenges on achieving climate impact are around mitigation, adaptation, and resilience building. Mitigation, of course, is around carbon emission reduction of GHG footprint. And in India, 90% of that actually comes from three sectors that Avaana focuses on, and I'll speak about that in a minute. But in addition to mitigation, in the global south, of which India is a large representative, we also have to think about transitioning our economies and societies, so adaptation, and resilience, which really aims to protect vulnerable communities and professions, MSMEs, rural agriculture from climate action, climate change. We spoke about the three sectors. 90% of India's emission footprint comes from the sectors that Avaana focuses on, and that's why we have chosen them. Energy transition, supply chain and mobility, and climate resilient agriculture. Not only is it a large part of the emission footprint, but it's also a large part of our economy, and consequently big market opportunity. So climate problem, climate opportunity are two sides of the same coin.
Absolutely. In fact, I was going to talk about the three sectors that you're focusing on. Investments over the years in these particular three sectors have actually seen an uptick. So give us a sense of the kind of innovations you're looking at in each of these verticals.
So in energy, for example, everything that goes from microgrid to storage to grid access. India, of course, has a large grid access. So access per se, but the cost of access, storage, carbon footprinting, carbon measurement, scope 3 measurement, mitigation, sequestration, carbon markets is all part of the energy transition story. We also look at resources, including water and waste management and circular economy. Supply chain and electric mobility is a very exciting sector in India. Supply chain digitization leads to efficiencies and decarbonization. And of course, we are seeing a very exciting story play out in the electric mobility space, whether it is with the charging infrastructure, its software solutions. We have companies like Kazam that are building the software layer for interoperability across charging. We have companies like Aeron that are creating a full stack solution for rooftop, solar and energy transition. And on the agri and climate resilient agriculture side, so really creating food security for the country and for the world, companies like Iki Foods that are able to grow everyday Bharat Ki Sabzi solutions in hot climates like Kota and Rajasthan at market prices, 8 to 10 rupees a kilo for tomatoes. And consequently, we are seeing very exciting new technologies emerge that will solve not just for India, so solving for India, but also solving for the world.
Right. So not just solving for India, but solving for the world. So some exciting innovations there. But Anjali, we're completely out of time on the show. Thank you so much for joining us, and we wish you all the best going forward.
Thank you very much.
On that note, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.